Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 5th of June, comes to you from London. And we start by looking at the dollar index. Dollar's had a really bad week. We see here this big red weekly candle. Remembering this is my long-term weekly, my medium-term daily, and my short-term 60-minute chart. We cover this, of course, in the training courses as well. But here we see a big falling week in the dollar, lots of down days. That's taken us into medium-term bearish and short-term bearish territory. So the dollar has had a rough week, and if we look at the euro, of course, that's the reverse. The euro looking very strong against that weak dollar. So we are in medium-term bullish territory, medium-term bullish. But the long-term chart still does have these big downside targets hanging over us, and we are, on the point and figure chart at least, still bearish. And we haven't yet made it through the cloud on the lagging line. Looking at the dollar yen, yen is actually weaker here. Yen tends to do well in times of uncertainty, and we've seen some certainty returning to the market, and that's why we're seeing the dollar looking stronger against the yen. Dollar buys more yen at 109. Looking at sterling, we're up against the dollar here as well, 126. Just hitting the resistance levels that we saw back in April and May. We're still bearish long term, of course, but medium term starting to see some signs there on that weaker dollar. And if we look at euro sterling, this relationship of course, now looking directly at the euro and sterling rates, and we see here sterling is just that little bit weaker, sitting at about a 111 at the moment. So sterling has been, of course, down as low as 105. We recovered, but we are bearish against the euro. So sterling not coming off so well there. Against the Swiss franc, we see sterling sitting at 120. Again, fairly flat this week. And against the Aussie dollar, sterling falling quite heavily. Sterling buys less Aussie dollars, and this is really what we see as a risk-on trade. The Aussie dollar, very commodities-laden economy, of course. So we are just seeing a return to Aussie dollar strength there. Lots of downside targets. Bitcoin sitting at 9,800, can't quite get above the $10,000 level. And if we look at the markets last night, we saw the S&P 500 index up down 0.3%. Still a long way from a new high there, but the Nasdaq 100, driven by the FANG stocks, did actually make a new intraday high. Quite unbelievable. We couldn't hold on to that level. It'll be interesting to see. And looking at the Dow, we were very flat last night as well. The futures this morning, the S&P future up 1%, and the Nasdaq E-mini up 0.6%. So it does look like we will see a continuation there. The FTSE future we see is up 1.3%. So that's looking pretty strong, and the cash market in the FTSE is up 1.1, and then mid caps up 1.4%. The the DAX is up 2%, so that's looking very strong as well, and the CAC Current up 2% as well. So markets generally looking strong. Tokyo up 0.5%, so looking better here as well. Back into bullish territory. This weekly chart needs to hold that for a few weeks really to be sure, but we are seeing improvement there. The Hang Seng up 1.6%, and the Chinese market up 0.4%, and the Sensex in India up 1.2%, so quite significant there as well. And the Aussie market, last of all, was fairly flat. So you might say to yourself, how on earth are these markets recovering to the level they are on coronavirus? We've seen this driven very heavily by the FANG stocks, remembering that Apple, Amazon and Microsoft make up a third of the Nasdaq 100 index. So Apple nudging new highs there. Amazon, of course, has been a beneficiary of the coronavirus outbreak and has been making new highs. And Microsoft also has been very resilient, nearly making new highs as well. And what's interesting now, if you look at a stock like British Airways, up almost doubled in the last few weeks, and there's not a story that you'd imagine that British Airways stocks have doubled. Of course, we've fallen from 650 to 150, so we've fallen by some 70-80%, but then we've recovered from that low to double from that price. We've got a lot of work to do to get back to the levels that we saw, of course, but there is just some signs of optimism returning there, and that's the FANG stocks have driven the market to these levels, and now we're seeing some of these other stocks coming from behind, holding the market up. Of course, a lot of this also on Fed action, and we're waiting really for these US employment numbers today, which are expected to be pretty dire, but the futures market is up quite strongly, as we've seen. Commodities looking pretty strong. Brent crude is up, looking strong there. WTI also looking higher. Up 2% on Brent crude this morning. So oil back in the $40 mark, so that's looking pretty strong. US NatGas also undergoing this recovery as production cuts, aggressive production cuts in the US will take hold, and that will drive the price higher. And we look at gold. Gold is actually still looking very bullish long term, but we have been pausing for both the last several weeks, and short term we're still in bearish mode. Of course, gold being the risk on trade. Looking at US 10-year yields sitting at 0.84%. They've really trended quite strongly this week as well, so quite significant there. Just looking at the whole energy mix, we see here strong recoveries really across the board. We've got coal up nearly 2%, emissions up 1%. European gas products here, we see TTF up 3%. Looks like we might well be forming a bottom here, so that's quite significant. Got upside target of 566.64, and German power up 1.3% as well. So we are seeing some quite strong recoveries. That's it for today. Until Monday, have a great weekend. Happy charting. See you then.